I do very much want to make this a conversation rather than just me giving a speech, because honestly, I'm here to learn from you as much as I'm here to share with you our perspective at the Minneapolis Fed. But let me just start out by giving some opening remarks on how we're seeing housing. And let me actually just back up for a second and tell you why the Minneapolis Fed cares about this topic. And actually you have to go back in American history to why is there a Minneapolis Fed at all? If you go back in American history, Americans didn't like the idea of having a central bank at all because it just sounded very undemocratic. You know, Alexander Hamilton, way back in time, created the first central bank of the United States. Then they got rid of it. Then they created another central bank. Then they got rid of it. And then the U.S. economy was hammered with banking crises in the late 1800s, and a really big one, the banking panic of 1907. So then Congress said, well, even though we don't like the idea of having a central bank, we're going to create one, but we don't want it all concentrated in Washington, D.C. We want to distribute it around the country. And that's why we have this unique structure in America where we have the Federal Reserve Board in Washington, and then we have 12 independent regional Federal Reserve banks, including the Minneapolis Fed. And our jobs are to get to know what's happening here in our regional economy and bring that knowledge back to Washington, D.C. when we set monetary policy for the nation. So the reason that I'm here and the reason that there's a Minneapolis Fed here is that we're here to learn from you about what's happening in our local economy to make us smarter so we can bring this information back to Washington, D.C. And that's why having this be a conversation more than a speech is so important to me so that I can hear from you. Now, why do we care about housing at the Minneapolis Fed? Well, Congress has given us our goals. The goals that Congress has given us are two goals: stable prices, so an economy that's not overheating and not limping along, and maximum employment, as many people who want to work are able to find jobs. Well, guess what affects people's ability to find jobs? They got to find a place to live. And so it turns out affordable housing is actually woven into the fabric of us achieving our maximum employment mandate. So are things like education, by the way. We know that workers need to have the skills to take the jobs that are available. And so that's why these types of topics really do matter to the Minneapolis Fed. And my colleague Ela Rausch is here, has been working on these topics for a long time. I mean, going back, the Minneapolis Fed started doing work in this, most recently in 2004, in what was then the Emerging Markets Housing Initiative, and has continued to bring analytical and data support to try to bring a research lens to the work that everyone here is doing. And so we're proud to be partners with you, and thank you for including us. Now, as I've traveled around our region, not just in Minnesota, but in neighboring states that are in our region as well, every single place I go, it's quite remarkable, every single place I go, affordable housing is one of the biggest challenges facing the local community. And as a policymaker, that makes me scratch my head and say, what's going on here? Because you would imagine that some areas would have an affordable housing problem, other areas wouldn't. Every region has its strengths and its weaknesses. But if every place I go, I hear about affordable housing problems, something's broken. And so the question that we're asking ourselves at the Minneapolis Fed is, what is structurally broken that is causing this affordable housing problem to be so widespread, right? It's not unique to red districts or blue districts. It's across all districts. So what's going on? And I was recently in Duluth visiting with small businesses, larger businesses, and an executive at a business said to me how much trouble he had moving to Duluth to find a place to live. And I said, how can that be? Where did you move from? He said, it's much cheaper where he used to live in Houston than it is in Duluth. And I said, how can it be much cheaper in a huge American city than it is in a pretty small American city? And so we're digging into this, and this is what I want to hear from you as well, what your theories are on what's going on. Our initial assessment is it's all of us imposing lots of barriers to new supply coming in. That other parts of the country do a better job, not every part, some other parts of the country do a better job reducing barriers to new supply coming in to meet the needs of families, low income, middle income, well-to-do families. And I'll give you an example of what such a barrier could be. I live, and I'm part of the problem, let me confess. I live in a western suburb, Orono, that has big lot sizes, big minimum lot sizes. That's a barrier to new supply coming in. I read in the paper the other day that California is passing an ordinance to require solar panels on every new development. Guess what that does? That raises the minimum cost of housing coming in. And every time we impose a requirement like that, whether we realize it or not, we are directly putting the target on low-income families and making it harder for them to afford to rent or to afford to buy. And so this is what's so tough from a policy perspective. These are lots of micro decisions that each of us is making in our local communities that when you add them together become big barriers that directly affect low-income families. Let me say that again. Every time we have a good idea of a minimum requirement to put on something, it directly affects the ability of low-income families to enter the housing market. And so we're trying to do research now at the Minneapolis Fed to quantify this. How big an effect is this, and what can we do about it? Part of what we have to do about it is educate people, educate local leaders, that each of these decisions that seems like a good idea on the time, when you add it all together, it drives up the minimum cost of housing and makes it unaffordable for families. And so the work that Mary and your group here is doing is enormously important, but I also will say the answer cannot be just an endless supply of additional money from the legislature to support more subsidized housing. All right, you guys are doing a great job, you're scaling up, you're meeting needs, but the more you scale up, and I applaud you for doing it, you know the lines are almost endless of the families that need your support. So somehow we have to find scalable solutions that can complement the work that you're doing so that more supply can come in to try to bring down these costs so that families who have jobs can afford a decent place to live. And so we have a lot more work to do. You know, we are just scratching the surface on this, but this really is about each of us taking a hard look in the mirror and recognizing how we are part of the problem. Right? We say, I don't want more development in my backyard. I don't want this multifamily development near where I live, et cetera, et cetera, et cetera. All of this are barriers to new supply coming in, and each one of those actions drives up the minimum cost, makes it less affordable for low-income families. And so, and that's what, from a policy perspective, is going to be so hard to solve about this, because how do you get everybody to recognize our own role in contributing to this problem? And then willing to say, you know what, I'm gonna do what's in the community's collective best interest, not what's just in my own narrow best interest. And so that's what I think that we're wrestling against. So these are just some initial observations of what I'm seeing as I travel around the region. And we have a lot more to learn from communities around the country that may be having more success. What can we bring here? And what can we share with them that's working here, et cetera. But I want to have a conversation with you. So I'm being pretty blunt about what we're seeing. I'd love to hear from you. If you disagree with me, tell me. I want to hear why you disagree or what other avenues you think could be solutions. But the only explanation we can come up with for why this is so widespread is that we have created a lot of barriers, well-intentioned barriers, that drive up the costs. And that's affecting, who does it affect? It affects low-income families. And I think we need to be honest with ourselves about that. But I would appreciate hearing from you. If you disagree with me, if you agree with me, what alternatives that I'm not considering. I'm here to learn and listen as much as I am here to share with you our thoughts. So with that, I look forward to having a discussion and hearing from all of you. So thank you.
Thank you. Good morning, everybody. I'm Julie Gugin. I'm the Executive Director of the Minnesota Homeownership Center, and I co-chair the Homeownership Opportunity Alliance. Thank you all for being here. It's so exciting to see this full room. You know, it's anytime you plan a party, right? The question in your mind is anybody going to show up? Am I going to have too much food? So we're happy to see everybody here. So thank you very much. I do want to stress what Casey and Mr. Kashkari have both said today. This day is about having a dialogue. So I do want to hear from you in the audience. I want questions, comments, and we'll allow Mr. Kashkari to respond. Shannon Ekman, raise your hand, please, Shannon. And Linda Lee have microphones. So it's imperative that you wait for them to get to you. The acoustics in this room are a bit challenging, especially with so many people. I do want to start out with a question for Neel. The Opportunity and Inclusive Growth Institute. We were quite excited as an alliance when the Institute was formed fairly recently, and we're very curious about your ideas about how the research that that institute will produce can align with community engagement and community outputs.
Well, thank you. Thanks for the question. So one of the big surprises I had moving to Minnesota 2.5 years ago were these gaps, the racial gaps, economic disparities, whether it's employment or housing, et cetera, education. And I wanted to understand why these gaps exist. And so I started asking questions of our researchers. And to be honest with you, I didn't find very compelling answers on what are the structural reasons that these gaps are so persistent. And the Federal Reserve across the country employs more PhD economists than any organization in the world. We do some really exciting research on a lot of topics. And I talked to Janet Yellen, the then chair of the Federal Reserve System, and Jay Powell, the current chair. And I said, I think the Federal Reserve has a role to play in bringing our research expertise to bear on trying to unraveling some of these complex problems. And that's where the idea for the Opportunity and Inclusive Growth Institute came up. We want to bring the Federal Reserve's research capability to try to analyze what some of the structural barriers are, and then hopefully to help come up with actionable policy solutions. And again, it's going to touch housing, it's going to touch education, many different avenues. These things tend to feed off of each other. So, we had a conference on, I'll give you an example of some of the research. Now, this research was not done by us. It was done by a professor who came and presented to us on Friday at one of our conferences. Very interesting work. This is not about housing. Just bear with me for a second. You've probably heard of ban the box, which is a barrier to people getting employed, sometimes are criminal background checks, and maybe they're not necessary to do these criminal background checks for certain jobs. Well, you know what this research showed? That in communities that have adopted ban the box, it's working against communities of color, because employers are making an assumption about diverse applicants. If I can't ask you if you have a criminal background check, they're assuming that they do. And so ban the box is meant to help, it's actually hurting. That was the research that was presented on Friday. So that's an example, and it was shocking when we saw the data. And this is all on our website. You can download and watch the video of the professor presenting her research. We have to do the research, because sometimes we have a good idea, it seems like a good idea, and it may not work out the way that we think, and it may end up doing more harm than good. And so we want to bring rigorous analytical capability to bear on these problems, and that's one very tangible example.
I'll figure out the buttons before the day's over. A theme of the Homeownership Opportunity Alliance's work is we want research and we want experience to inform how we can address systemic changes in the homeownership continuum, all the way from on-ramps to homeownership through education and advising, all the way up to keeping people in their homes. You talked a little bit about the supply portion of that system. Can you say some more about what you believe are some of the systemic challenges that consumers, lenders, realtors, and all of us involved in this really need to be paying attention to if we're going to move the dial?
Well, I talked about the supply and the regulatory barriers to new supply coming in. So that's a big piece of it, we believe. We also know access to credit is enormously important, and that's a role that we play as bank regulators to make sure that banks are providing equal access to credit to all of their customers. And we do exams for banks to make sure that they are abiding by the spirit of those rules. That's another one. And we know it tends to be in low-income communities or in Native American reservations, as an example, access to credit is a big barrier. And so we've been doing work at the Minneapolis Fed for a long time to try to improve access to credit so that families that do have jobs, that do have incomes that can support a mortgage, have the availability to get the mortgage. So there are big supply issues, but there's also access to credit issues, and the down payment assistance that you talked about, obviously, Mary, plays a very important role as well.
What's your perspective on alternative forms of credit and how the system could treat payment streams like rent and other forms of payment differently, as we think about ensuring better access to credit, so alternative forms of credit.
Can you tell me more? I want to make sure I respond. So you probably know a lot more about this than I do.
Yeah, in many of the community dialogues that we've had leading up to today's event, we've heard from consumers who say, I'm paying $1,800, $1,900 a month for rent, and that doesn't count towards my credit. So when I go to access a mortgage, that payment history and that ability to maintain stable housing is not accounted for example.
Interesting. I was unaware and have not. It just demonstrates I have a lot more to learn about this. So I'm sure Ela knows this very well, and I'll follow up with her afterwards. But what you just said makes a lot of sense, that we need to take advantage of that information so that people can demonstrate. If I've got a good record of making my payments on time, that should count. That makes sense.
Great, thank you. Okay, so we'd like to hear from you in the audience. So raise your hand or stand up prominently, and one of the microphones will come your way. Gretchen, I saw your hand first. Yeah, stand up. Introduce yourself too, please, for context.
Thank you. I'm Gretchen Nichols from Twin Cities LISC. So bear with me. I've recently been at Policy Links Equity Summit in Chicago and attended a session about communities that are impacted by police harassment. And public health has done a lot of research on how that has impacted their social health determinants in many ways, but the Justice Department has done nothing about that research. So we work in these silos of realizing and understanding issues from different lenses. So it shocks me a little bit that you can't find any reasons why we're running into these issues around affordable housing. When you point to the band to the box example, that suddenly we have this kind of implicit bias by employers that people of color are probably doing crime. That's a racism issue. It's not a race issue. So we need to face these issues directly and understand what's going on. And in addition, we've been working a lot here in our region around alternative financing methodologies because we have a very large East African community, people of color who are not able to access homeownership because of the financing tools that we have available. So we need to get at these issues in creative ways. It's the systems that are locking us out of it. It's not the sustainability dimensions of energy efficiency and health benefits in our properties, and safety benefits in our properties. Maybe at some level, but there's much more deep structural issues that are at hand. And I really wish the Fed would become much more vocal about those issues.
Well, I appreciate your comments. And I don't mean to suggest, we had no idea or that, we don't realize that discrimination exists. Of course we do. But if we just say, well, all of these disparities exist because of discrimination, and we just need to end discrimination, I don't know what to do with that as a policy maker. So to me, it's okay, let's acknowledge we know discrimination exists in many different forms of life. The question is, what do we do as policymakers to try to create the bridges that can get past that discrimination? And so, I appreciate the spirit of your question, but I do think there is a role for research to unravel some of this, because if we just stop at acknowledging discrimination, I don't know how to then take it forward from there.
Yeah. So hi, good morning. My name is Terry Tao. I'm from Nexus Community Partners, but also been part of the Governor's Task Force on Housing. And so two things. One is that one of the things we've been talking about is actually how do we create, to your point, the political will. We have all the data props to the Fed for doing all this additional data research, disaggregating data, but we have a fundamental narrative problem where it's about individualism, and very much that even if we do have the data, people's frames about race and class are still so strongly embedded. So I guess we're, as you're headed down this path, similar to Gretchen's point about it, is where is the data to push a political will, to push an agenda that is about equitable outcomes?
I got to ask all of you the same question, right? How do we get it? So the Fed is designed to be a non-political, non-partisan institution. So the best we can do is to do the dispassionate analysis and arm other policymakers with the data and analysis so that they can make informed decisions. And an example of this is the Minneapolis Fed, long before I got here, has done really important work on early childhood education. And we weren't lobbying, but we said, we're going to do the analysis and we're going to show the economic returns to early childhood education. And the state of Minnesota took that research and has really marched forward with it. And so that's an example of a contribution that we're proud to have made and want to continue to make. And we're going to look for other ways to play our role within the bounds that Congress has assigned us.
Neel, are there locations around the country or even in our region that you're aware of where you've seen some significant shifts in political will? Because I tend to agree with Terry's comment that it's still taking a while here to get community engaged on this issue in a way that can really really drive change from our elected officials at all levels.
I'll say I'm more optimistic. You know, one of the things that I was surprised coming to Minnesota about our disparities, but I was also surprised coming here and getting to know the business community that more than any other place I've lived, and I've lived in a bunch of places around the country, the business community is very engaged civically and does actually advocate for things. And they've said to me, tell us what to get behind, and we'll get behind it because we want Minnesota to thrive. We want our workforce to thrive. We want to attract people and keep people here in a growing Minnesota economy. So I actually think more than most places, the opportunity is here. But as you said to the lady who made the prior comment, you know, you got to come together with a message and with a strategy. And I do think there's an opportunity here to drive real change, positive change.
Thank you. Kathy? Touch it and let it go, and then give it a sec.
Sorry. Kathy Wetzel. Kathy Wetzel. Kathy Wetzel Mestel with PRG, a local nonprofit working in affordable home ownership. You touched on the aspect of regulation as being a cost driver on affordable housing. And I am a bit skeptical about that. I just can't think of a time when in the past deregulation has benefited low-income communities and communities of color, and I'm wondering if in your research you can cite some examples of that.
Well, I don't have all the data at my fingertips, but there are recent articles coming out about how rents in Seattle have been declining now for the first time, because I might get the anecdote wrong. In the last 10 years, they built more units than in the prior 50 years. I mean, this is the basics of supply and demand. If more supply comes in, and by the way, it's not just a little local market, meaning St. Paul is a local market or North Minneapolis is a local market. It actually turns out, we believe, that if more supply comes into the Twin Cities broadly, it's kind of a fungible market. People end up moving around. When I moved here, I looked all around the Twin Cities. If more supply comes in, basic economics says that should at least slow the price rises and may even help bring rents and bring affordability, you know, make it more widespread to folks. And so we come at this just from an economic perspective, and I do think there are examples around the country where more supply has led to more affordability. But again, I don't want to over promise the analysis we've already done. We have more work to do, but we do think this has got to be part of the solution. I've never seen this, I'll tell you this for sure, I've never seen a problem like this that's so widespread where just saying, well, we're going to keep subsidizing more and more and more, that ever meets up with the demand. I'm not saying what you're doing is not valuable, but I don't think that by itself is going to come up with a scalable, enough scale.
Michelle, do you have somebody back there or not? Karen?
Hi, I'm Karen Reed with Neighborhood Development Alliance, and we do counseling, but we also do development of both multifamily and single family. And the biggest cost to us is labor and supplies all go up. And frankly, every time Houston floods out with a hurricane, our costs go up because they just suck up all the materials. I was at a continuing ed for general contractors and for ones that do the single family infill stuff, and the guy who's teaching said, how many people are planning to retire in 5 years? And 3/4 of the room they're aging out. We have a huge crisis in labor, which is driving up labor costs because no one's going into the trades anymore and not the ability that we have. So it's not about solar panels, it's about getting people that can put siding on houses in a quality fashion. So I think it is. I find the solar panels a specious argument. We need to have sustainable homes that are energy efficient because they cost less to run, and we need labor and supplies that can meet the demand. And I think it's a real hard problem.
Well, I guess we'll have to respectfully disagree. I mean, just to say energy efficient houses that cost less, sure. I mean, of course, we'd all like more that cost less. But I do think we need to have a real gut check about, I give you, these are all anecdotes, and sometimes we're battling anecdotes. None of us get very far. But an anecdote that I heard recently was a single mom with 4 kids living in a 2-bedroom house. They came in and rezoned it and said, oh, that's too many people living there, and they evicted them. A lot of these things are well-intentioned, and they end up having real profound effects on the folks that we're trying to help. And I think we need to be honest about that. But to the point about labor, I'm with you. But if wages are going up for low-income families and for working folks, that's a good thing. One of the big conundrums we have at the Federal Reserve is why wage growth has been so low. Not that it's been too high, it's been so low. So I'm not going to tell you, well, we want to keep wages low, that's the solution to the affordable housing problem. That doesn't work. We do want wages to grow. We do want people to come back into the job market. One of the big surprises we've seen in recent years, as the job market has gotten stronger, a lot of people that we thought were permanently lost from the job market, because the Great Recession was so traumatic, they've been coming back in and taking jobs that we didn't realize that they still wanted to take. There have been people who, we take these surveys, the federal government does surveys of people to get a sense of the job market. People who last month said, I'm disabled and not looking for a job, this month they're taking jobs. So I think the healthy job market is enormously positive for our community and for the country as a whole. And so we do want to see wages go up, and we do need to find a way to bring in more supply.
Okay, Linda?
Me? Okay. I'm Cassie Burr. I'm from Community Action Duluth. My question, I was wondering, so you mentioned in other cases, solar panels, large lot sizes. I'm wondering if you have any data so far about the barriers that you think are there for Minnesota suppliers.
Well, I think we have lots of anecdotal data and evidence, but we don't have a way of quantifying yet, at least I have not seen it, what that translates into direct affordability. And so that's where I think we need to do our work to try to say, hey, all of this stuff added together is raising the cost of housing by X%, and then this many families end up being affected by that.
So you don't know what that stuff is yet?
We know what some of the barriers are, but we don't yet have the analysis say it's X% on rent or X% on the cost of the home. That's where we need to bring more data and analysis to bear.
Mary Lou?
Mary Lou Egan, Ramsey County. I think you started to talk about this because what I see, we run a down payment assistance program, is people just don't make enough money. And you can put all the subsidy you want, but if people who work full-time or 2 people that work full-time don't make enough money, they can't afford to buy a house. So, and job wages just seem not just here, but nationally, profits are increasing for the corporations. You see the economy's doing great, and wages are really stagnant, and even in a tight labor market.
Yeah, it's a big conundrum. I mean, we've been trying to understand. We would have expected, typically you would expect with the unemployment rate falling from 10% nationally in 2009 to 3.9% today, we would have expected much stronger wage growth than we've seen. And so this is a little bit of a conundrum for the economics profession on why wage growth has been so muted. A number of theories are that 3.9% number is misleading, that there's more slack in the labor market, because the 3.9% headline unemployment rate only includes people who are actively looking for a job. If you gave up looking in 2010 when you got laid off, you're not counted in the statistic. And we've seen some of those folks come back in. So there might be more slack than that headline unemployment rate implies. There's also analysis that suggests the bargaining power of businesses versus labor has shifted towards businesses over time, and trying to understand that and what will cause it to shift back. But this is what makes housing complicated and why supply and demand is so important. Because let's just say we get wage growth up. Well, guess what? Home prices are going to go up. And so it ends up being you don't catch up just by having everybody's wages go up because the home prices adjust. There has to be a supply response. if we want to actually make homes more affordable for working families. So I do think higher wages are positive for everybody, but there's got to be more supply. Otherwise, we're just going to drive up the price of homes.
Michelle, do you have anybody in the back, or Shannon?
This is Kaylee from the Neighborhood Development Alliance as well. So it seems, Neil, you're talking about an argument for increased density at its highest point. What do you say to people who have complaints against livability?
Well, again, I mean, I hear you, and I think we just need to be honest with each other that there are trade-offs. But simply, if all of us says, I'm trying to maximize my own personal livability, the implication of all of us maximizing our own individual personal livability is we are really creating barriers for other folks to come in and live. And so I hear you. It's not a free lunch, but we need to be honest with each other that there are real costs to us optimizing for ourselves individually instead of creating new opportunities for families to afford a place to live.
I'm Judd Murchie. I'm a policy researcher at Wells Fargo. I've spent about most of the past year actually looking exactly what you guys are doing and kind of trying to understand these systematic barriers to affordability. And we keep coming to the same thing. Just to put in perspective the barrier costs associated with supply, Home Builders has just done some work on this, and they say in the past 5 to 7 years, the costs of a new single-family house has risen by $84,000 just from permits and regulatory fees in the past, just since the crisis. So that means a $200,000 house to build now costs $284,000. So it's a third more, but no better quality. And so that is a significant kind of a cost barrier that we've seen. A question I'd ask, I don't know if you've looked at this at all, is on the demand side, as DTIs have risen in terms of mortgage lending, and as we now can give a loan for 45, 50% DTI with the supply crunch, is that creating kind of a leverage-driven price increase at the bottom end, where you've got you're allowing people to borrow more, but you don't have enough supply coming in? So if we look at the kind of the housing price crunch, it's happening a lot more at the bottom end,
Right.
And is that contributing to it? So I'd be interested if you guys have looked at that.
I have not looked specifically at that, but I'm familiar with some of the data that you're talking about, and what you said, I think it makes intuitive sense and something we do pay attention to. I mean, at the Federal Reserve, we're always trying to look for signs of asset bubbles or unsustainable debt growth, as an example. And so we don't see a big bubble on the national economy. We don't think there's a big new housing bubble the way there was in 2006, but certainly there could be microdynamics that we do need to pay attention to. And so, I think we need to look closer at what you said, but what you said makes intuitive sense.
Will Wells Fargo make that research available? Awesome, great. Up here, please.
Hi, my name is Kim Edwards from Core Trust Bank, and forgive my voice, I've heard the word affordable a number of times, and we've started to touch on this part of the conversation with income. And I'm just so old, you gotta forgive me. But my solution to a money problem has always been more money. And where I'm going with this simply is that of all the organizations that are helping people to achieve home ownership, and I just had a discussion with the gentleman from Habitat for Humanity. Why can't we start to incorporate skills for the people that are receiving entry cost assistance, subsidized housing, contributing to their own housing by building a Habitat for Humanity home? For example, with Habitat for Humanity, why not have an apprenticeship program to enter the trades if you're going to live in a Habitat for Humanity home? Wells Fargo, huge in their community outreach. Why not have a mentoring program or something else? In other words, I think that there's a missed opportunity with all that we do for families to afford homes, but we're not addressing the income issue. I think that we focus as a community very well on providing access to housing and home ownership opportunities, but we're not doing enough to help people increase their income. And you touched on the fact, just basic economics. Employers are looking to minimize labor costs, right? It increases their bottom line. There's the conundrum, I think is the word I heard you use.
Well, one, and I'll let Mary and others and talk about directly in response to the folks who are administering the programs, but one thing we have seen as the job market has gotten tighter, I go around the region and I ask businesses, they say, well, we can't find workers. We can't find skilled workers. The first thing I always ask them is, are you raising wages? And usually the answer is no. But once in a while they'll say, no, well, or then they'll say, we can't find the skills we need. I say, well, why don't you train them? And now we're increasingly hearing businesses saying, we are training them. That, we couldn't find the welder who walked in the door, who's got 10 years of welding experience, but we found somebody capable who was going to show up at 8 o'clock every day. We'll train them ourselves. And so the tight job market is actually motivating businesses to do some of what you're talking about, to try to give people the skills. And it's not out of charity, it's because it's in their own interest, because they need workers who have the skills, so they'll train them themselves. But in terms of integrating it with the housing program, I don't know if you have thoughts on that.
I'm sorry, I zoned out because I was going to ask this young lady a question.
Well, I don't know, Mary, do you want to?
I think my observation on that would be, and part of what we're hearing here today is that this is a complex subject, right? And there are a lot of intersections between labor, supply, government, consumer readiness, and political will. So it's interesting to think about that. Mary, you want to comment? The young lady behind Mary has a question.
Thank you. Greetings. I'm LaShella Sims, MICA, Metropolitan Interfaith Council on Affordable Housing. And I think there's also several things in play here, and you touched on a couple of them. One of them is our credit rating. I think we shouldn't make it so easy for other businesses to come in and affect our credit scores, especially when they're making mistakes. And then it takes a long time for these mistakes to be corrected. Yeah. And in the meantime, our credit score is going down. And then again, I think there's it's against the law for you directly to discriminate against me, but I can put policies and procedures in place to do the same thing. And just like you were talking about the solar panels, or the big size lots and things. And when we do things like this, we're really sabotaging ourselves, because in the end, we're creating homelessness, stress, and things like that. And it's going to bite us, because more and more people are becoming homeless and distressed, and our cities go down and deteriorate. And then also there's the political attitude, locally and at the state level in regards to the outstate, in-state, urban, suburban type attitudes. So one of the dynamics that come in play with that type of thinking is that now you have people that don't want to live near me, live out of state and live as far away from me as possible, but they're making decisions about my life. And that's in the workplace too. So those are dynamics that you have to really think about and change, and people's attitudes, and what plays into all of this. And some of them, it's kind of hidden, but it's there, and it affects us.
Yeah, no, I appreciate your comments. Thank you.
So getting at those systemic issues again that we talked about with Gretchen's first question. We have time for one more question.
Does it work? Eric Otternes. I'm a residential mortgage loan officer for Lake Area Mortgage for a very long time. Just to correct something you said, Julie, how people pay their rent, how much their rent is comparison to the new monthly payment, has been an important factor in the residential mortgage credit decision for years since I started.
Not universally, Eric. I would push back on that, but go ahead.
But okay. The question for Neel, though, is speaking of these unintended consequences, I've been reading about how Minneapolis is considering making people who have Section 8 vouchers a protected class, so that they would force landlords to enter into Section 8 contracts, even if the landlord doesn't want to. That, it seems to me, might be a place where an unintended consequence could come up. Has Minneapolis asked you guys to look at the potential consequences of that?
No, we have not, to my knowledge, have not been asked, but I'll check in with Ela afterwards. She may be more familiar with it than I am. But I agree with you. Some of these things sound very simple, and then sometimes they can have sometimes profound unintended consequences. And that's where research needs to play a role. Let me say one last thing. The city of Minneapolis, as you know, is voted to raise the minimum wage. They have selected the Minneapolis Fed to do a long-term research study to look at what are the overall economic effects of raising the minimum wage. Is the net effect that it helps workers? I mean, hopefully it helps workers, that's the goal. Does it help business? Does it hurt business? What does it mean for the overall economy? That's an example of the kind of analysis that we think we can bring to bear by saying, look, we're just going to do the analysis honestly. We're going to show you our methods and show you our results and try to inform policymakers with the best research available. And so that's just one more example of a contribution that we're trying to make.
So thank you all for your insightful questions. Some takeaways that I heard for the Homeownership Opportunity Alliance to think about. We got to get that research from Wells Fargo. We need to continue to align with what the Opportunity and Inclusive Growth Institute is doing and continue to look for ways for community representation to learn from and inform that work. And we've got a lot of work to do on systems everywhere from policy and racism and looking at underwriting and availability of credit as we think about addressing the issues that we're here to talk about today. So Neel, do you have any parting thoughts?
Just want to say thank you for all that you're doing. Really, it's enormously important work and an enormously important topic, and thank you for including us at the Minneapolis Fed, and we look forward to continuing to work with you. So we appreciate the partnership. Thank you.
Thank you.